Greetings, my name is Sunil Sharma. I'm the Chief Investment Strategist at Ambit GPC, here with your monthly summary of our investment outlook for June 2026. Let's get started. So focusing on key trends, one of the key trends that I'd like to highlight is the FI selling and the change in the nature that we're witnessing. So if you look at this chart from October 2021, FI selling was quite closely correlated with the index performance. And again, September, October 2024, FI started selling and the index sold off as well. What's interesting is that this fairly close correlation has definitely weakened in the last few months, and as FIs have accelerated their selling to levels we've not witnessed, massive selling by the FIs, the market's actually held up. The market's actually shown a significant amount of resilience in holding up and not giving up gains or not losing, and so that is very notable as FI selling clears out, and we'll talk about that. So the related point I'd like to make is that there are increasingly questions about the AI trade. Sakana Fugu, I don't know if I'm saying that right, but they're coming forward with a model they claim is competitive with Anthropic and Mythos, and raises questions about the barriers to entry on these AI models, LLMs in particular. Raises questions about the pricing, as Sakana Fugu is significantly cheaper than what Anthropic is charging. And so the ROI comes into question, all of which raises questions around the AI trade, which from our perspective is a net positive for the India story. One of the other key trends I'd like to point out, and now much noise has been made about the INR weakening and how this is going to prove to be a challenge for India. I am going to take the other side of that story and look at what's happened with the Indian exchange rate relative to the yuan and other exporting nations like the Vietnamese, like Vietnam and the dong. And if you can look at the chart here, the spread between the INR and these two currencies has widened appreciably just in the last few months. And what that means is we've got an additional labor cost arbitrage opportunity, and our exports become that much more attractive. It makes India that much more attractive as an exporting nation. And so with free trade agreements also lined up, we think India's exports should do well in coming months, and we're witnessing some of that in the services data, and I'll share the manufacturing data as well, and it's also in the commentary. Now, over the last few months, maybe a year or more, there's been a narrative that's been building up about India not being an attractive destination, despite it being being the fastest large economy in terms of growth rate. And we share a bunch of data this month that backs up the data we shared on earnings on mid caps and small caps in particular last month. And some of the charts, credit in particular, extremely important for highlights confidence on the part of borrowers. And credit growth is up 17.6% year on year in the recent month. Credit to industry. We've been waiting for industry to step forward, and it seems like industry is starting to step forward with a credit growth number that's amongst the highest in the last decade. So we're starting to see this across NBFCs, across small businesses, across many parts of the economy. Continuing on with what I just talked about in the previous slide, manufacturing growth, exports is accelerating higher and showing strong momentum, particularly in the recent month, up 13.2%. And then if you look at the last 2 months on public capex, that too has picked up significantly. So many different drivers in place. Inflation is coming down. We'll talk about some of those again next. So I want to spend a couple minutes on some of the trends we've talked about and invested in and recommended over the last, since March at least. One is the CapEx, obviously, but more importantly, we've been focusing on energy, the relentless demand for energy from a variety of reasons, not just AI. The rising defense spending that the Middle East conflict has brought to the fore, and nations realigning, recognizing the need for supply chain security, trusted partners, resource availability, resource security. Those are trends that we think have legs, and we continue to be positive about those, while noting that inflation worries are abating. Brent crude's fallen quite rapidly, under 80 at this point, and so that bodes well for inflationary concerns going forward, which should bring down, which should help margins and also consumer spending power. So to just quickly summarize, and there's lots more in the commentary, we think that the India macro picture is improving. Crude oil is down sharply, export opportunities, export momentum. The INR has stabilized as a result of the RBI's initiatives. And AI stocks have been rocked in the last few, particularly the Max 7. So the FI frenzy, we think, to exit markets like India will abate in coming weeks or coming days. Government stepping forward aggressively with CapEx, and even private industry is now coming forward, which I think is probably one of the strongest indicators of confidence in the economy. Index constitution remains a problem, so we prefer a thematic, sectoral, and stock selection driven, active management driven approach that will drive the best opportunities for returns and for portfolio performance. Asset allocation remains extremely important. There's no change in our allocation this month. But we think the peak pessimism on India by FIs and possibly some of the retail side as well is a contrarian indicator. We think the Indian story remains in place. We remain bullish on India, and there's lots more detail about emerging markets, about the US, about currencies in the commentary, as well as about India. Please do take a look at that, and we'll see you next month. Thanks for watching. Take care. Bye-bye.